Good morning and welcome to everyone joining us today. For those of you who don't know me, my name is Massimo Grassotti and I'm part of the investor relations team here at East Capital Group. Today's webinar is brought to you from our headquarters in Stockholm, where I'm sitting, as well as our office in Moscow, where Jacob Grapengiesser is joining us from and has been based out of since 2007. Jacob is our deputy CIO, partner and senior advisor for Eastern Europe, as well as expert in the volatile market that is Russia. As I'm sure you're all eager to hear what Jacob has to say, let's dive right in. Well, good morning, Jacob. Thank you for joining us today. Before we get into the nitty-gritty of it, I'd like if you could just start off by giving us a brief overview of what's really caused the current turmoil and what sentiment is like on the ground there.
So the turmoil is because Russia has placed somewhere around 100,000 troops on the Ukrainian border. And I think the West is very afraid of simply a Russian invasion into the Ukraine. And we had very serious diplomatic efforts last week trying to resolve this. There was no real resolution, I would say, of the issue. But we have Blinken and Lavrov meeting in 2 days again. So I think give a kind of a final shot in terms of resolution.
Yeah, I mean, it's obviously been a rocky start to the year, not just in Russia, right, but on a global level. But I think, all eyes really are on Russia and what's going on, right? And so it sort of begs the question, when will this stop? What will it take for this to blow over, right?
Yeah, maybe let me share some slides and try to, give you the numbers, because I think whenever you speak about Russia, it's always good to have numbers to back up your arguments. So if you look at this, the Russian market, despite all the geopolitical noise, had a very good 2021, a bit depending on the currency, the market was up between 20 and 30%. But we also had a 28% correction since the peak in October because of this geopolitical noise. In April last year, which is a long while ago, there was a similar buildup of troops on the Ukrainian border. And in the 6 months following, the market was up 38%. The dividend yield now of the Russian market is 11.6%. That's the highest it has ever been. If we look at the equity risk premium, which is how investors assess the risk of the market, right? We are now at close to record high levels. We are now close to the levels we had after the Russian invasion of Crimea. We are at 12% and basically around 12, 13% after that invasion. So I think, risk is really peaking. Investors are really afraid of what is going to happen. And you can see it in two ways. You can see that, maybe the market is right and there will be an invasion and stocks will continue down, or you can see it as a buying opportunity that, typically kind of risk peaks when an investor's fear is at the maximum. If I go back a bit to the numbers, and again, I like to speak about concrete numbers. A stock like Gazprom, which is the largest Russian company, is now trading at an 18% dividend yield. You can see here the historical dividend yield of the company, going back all the way since I moved here in 2007. When I moved here, it was trading with a 1% dividend yield. Then we had a period when the stock was trading around 6% dividend yield, and now it is trading at an 18% dividend yield. So, kind of things changed, and of course, the company is probably a more attractive investment opportunity at 18% dividend yield than at 6% dividend yield, which is the kind of historical average for the past 10 years.
Yeah.
So that's one way to see it. But if we go back a bit to the scenarios, and I guess what everyone is asking themselves, what can really happen? The worst case is scenario is a full-scale war. It's a Russian invasion of large Ukrainian territory. The reaction from the West would be significant sanctions, cutting probably a few Russian banks from SWIFT. They would stop the licensing on Nord Stream 2. The market reaction here would be that the ruble weakens. There would be a significant sell-off of the market. The domestic names, the ruble-based companies, would take the largest hit because the exporters would benefit from a weak ruble. This is a bit what we saw after the invasion of Crimea. I think this is a very low likelihood. Russians have no support for this. I mean, Putin has no support for entering Ukraine on a large scale. The Russian population don't want that. The Russian population did support taking Crimea because the Russians considered it was always theirs anyway. And a large part of the population is more kind of linked to Russia than to the Ukraine. Another alternative is that Russia intervenes with Russian troops into the Donbass region, where you have kind of a proxy war supported by Russians. I think in this case we will see some sanctions from the EU, and the US, but it's not clear how much and how strong they will be. The market will likely sell off 5-10%, I would say. But then there would be a relatively quick rebound from those levels. And there would be a large rebound because stocks are simply so cheap. So the domestic investors, many of which are my friends, they are just calling me and saying, what's the direction in the West, when should we buy, etc. I think the base case is a kind of a slow de-escalation. You keep not all but parts of the troop on the border. There is this war of words, but no new sanctions. The market will probably stay volatile for a couple more weeks, but then it will slowly but surely recover. And there would also be a significant recovery. Again, 20-30% is probably the magnitude of a couple of months performance in that case. And then the best case is a real resolution of the problem. Maybe that would be in 2 days between Blinken and Lavrov. Maybe Biden and Putin will find some sort of resolution where Biden guarantees that there would be no missiles ever placed in the Ukraine, etc. And then you will simply have officially troops withdrawn from the border, and you will have a very sharp recovery of the markets. But probably we will be somewhere in the middle of these different cases. So we'll probably see a bit more volatility and then a recovery. Having said that, though, the Russian market moves very quickly. So we had stocks down a bit more than 5% yesterday, but this morning they are up 3%. And of course, like any positive news would also push the market in either direction quite quickly.
Yeah. I mean, obviously, we've seen that as you mentioned that it is a very fast moving market. But just to touch on something you mentioned there, right? Both Putin and Biden. There's obviously a lot of pride that fits into all this. We know that Putin's a very pride person, and that it's to him it's a big thing, right? Do you think there's a chance risk of back channeling going on? Where Putin obviously to save face, or both of them to save face, right? That behind the scenes that there might be something going on in order to try and de-escalate the situation a bit.
Let me put it this way. I think, unfortunately, it's a complex matter. I honestly think that NATO has never intended to take in Ukraine as a new member, but they don't want to promise that to Russia. That's sort of the enemy, and you don't want to promise that to the enemy. So this is really the root of the whole problem. And this is why I think that, if there's a resolution on a very high level between Biden and Putin, where they say, NATO will never become Ukraine will never become a full NATO member, but we might provide it some military assistance in terms of defense. Maybe that could work, for example.
Yeah, no, interesting. Just to touch again on something that you mentioned there, right? You were showing us the different case scenarios. As you also showed on one of the slides there back in April, peak moments of peak uncertainty, right? When turmoil is as high, has often proven to be a good time to look and to analyze and to potentially buy in the past. Would it be fair to say that could apply now as well?
No, absolutely. That is a very correct statement. I guess the problem is always to determine when is that point in time. Is that point in time 2 days ago when I personally bought, or is it going to be in 2 weeks' time? And unfortunately, it's close to impossible, I think, to time the bottom, which is why you probably need to go back to the numbers, right? As I said, gas from 18% dividend yield, even the likes of Sberbank are now trading at 13% dividend yield. I mean, I just think you need to, work with the scenarios, put different percentages, your percentages on them, and then how much the expected gain would be. That's probably what my advice would be to the general investor.
Yeah, fair enough. I mean, right, as you said, it's impossible to really time it, even though we'd all love to, right? But if we take a look at last year, I mean, obviously you had something working, right? You were able to find a special formula, because last year was a fantastic year for Russia, not just for Russia, but for our fund as well. Ending the calendar year #1 in relation to peers, 2.4 percentage points ahead of our closest competitor. I mean, what do you attribute this continued success to? I mean, where are they coming from?
Right. So our strategy for Russia had 11% alpha last year and was up 35% in Swedish krona. Last year was also a difficult year, and I think what we have been doing, we are here on the ground. We are seeing people every day, and I think we have a pretty good feel for what's going on. And we try to combine that with relatively quick repositioning of the portfolio. Unfortunately, it's a quick moving market, so we also need to be quite quick in terms of how we reposition and how we assess the current environment. There are great IT companies in Russia, but they are trading at pretty high multiples, and I think unfortunately, no one will really buy them now. Whereas to buy more traditional high dividend yield stocks that are at a record low valuation level is probably something you want to do now.
Yeah. If we take a moment, just look, I mean, we've focused a lot on Russia, obviously, as there is a lot going on. But if let's not forget to look at the rest of Eastern Europe, right? I mean, which continues to perform. Our new Europe strategy, for example, which is Eastern Europe excluding Russia, is up 9% year to date, 32% on a rolling 365-day basis. Impressive performance. Anything you'd like to comment there?
Right. So we have created a strategy which is without Russia, without Ukraine, and without Turkey. So all of those difficult and volatile markets is instead focusing on EU countries. I mean, the Eastern European part, which is inside the EU, which means, of course, much lower political, geopolitical, currency, etc. risks. That strategy has been doing extremely well, and it has been doing, I would say, extremely well, but with a much lower risk. So I think, on a risk-adjusted basis, it looks even better. I mentioned that, Russia also did well last year, but that obviously comes with a pretty high risk, whereas the New York strategy comes with, I would probably argue, quite a low risk and simply high underlying growth, both in terms of GDP and company profits. So it's a very kind of different risk profile, and I think that's probably for the investors that are just looking for like a solid return at a lower risk.
Yeah. Well, Jacob, at the end of the day, I mean, you mentioned these the different cases and the different potential scenarios. At the end of the day, I think everyone is on the edge of their seats, waiting to see what will happen in moving forwards, right? You suddenly mentioned that you bought yourself, so I think you see light at the end of the tunnel. But any comments on what we can expect, really, the next coming months? Which scenario you really think will pan out?
Yeah, I mean, it's hard to say, but I think we are probably will get one of those two scenarios in the middle. So one is this slow de-escalation. So we'll see some more volatility. We see this war of words, but no real actions, no real sanction. I think we're then probably close to the bottom. The other scenario, which is a bit worse, is if Russian troops would enter the Donbass area. Again, I don't think they would enter real Ukrainian and take new ground in the Ukraine. I think that's very unlikely, but they might enter Donbass, which is then already an occupied area, but they would officially enter it, and that would trigger some sanctions, but those would be quite mild. And then the market will probably take a beating, and the currency might take a bit of a hit over a period of 2-3 days, and then after that it will start to recover. I think the real question is probably what's in the price already. I can tell you that I've never seen such a discrepancy between reporting in Western media and the understanding here of what is really happening. So the understanding here of people on the ground is that there is no way Russia will invade Ukraine. It's very, very low likelihood. I'm not saying that these people are correct, but these are let's say the elite of Moscow is thinking that, whereas the elite in the West is thinking that an invasion is absolutely imminent. So very, very kind of diverging views, which is again why it makes sense to be on the ground and just see what is happening. And this is also why the Russian investors are now massively buying their own market. That maybe some of them are trying to time it to buy it even cheaper, but they are certainly quite ready to enter.
Perfect. Well, interesting times ahead. We look forward to seeing it, and obviously thank you for your time and taking the time to share with us from your perspective over there in Moscow.
Yeah, thanks a lot.
So thank you everyone who called in today. Thank you for your time. Please do not hesitate to reach out to our representative or any of us here at East Capital if you'd like more information or if you have any questions. Thank you very much and have a good week.